The stock market has continued its rally as the coronavirus is now on the verge of losing its epidemic status. In this week's video, we're going to cover what happened in the markets last week, technically analyze the Nasdaq and also the explosive move we just saw from China, and cover the coronavirus data that has investors so optimistic.
The biggest news story last week was that the U.S. economy added 4.8 million jobs versus the 2.9 million that was expected. The unemployment rate also went down from 13% to 11%, which is showing that the U.S. economy continues to add more and more jobs. The strong economic data led the U.S. markets higher last week, with the S&P 500 up about 4% and only down 3% now year to date, but it's been a wild ride so far. The S&P was down about 4% for the first 6 months of the year, but that included a 35% decline followed by a 44% rally. The Dow Jones was also up over 3% just last week, and the Dow just had its best quarter since 1987, up about 18%, but still down just under 10% for the year. The Nasdaq had the best week, up about 4.5%, and now up 14% for the year, while the Russell 2000, even after almost a 4% week, still down just under 15% year to date. Foreign and emerging markets also had a strong week, with the emerging markets leading the way up over 3.5%. Now Mike's going to talk a little bit more about the big move that came out of China from Sunday night into Monday morning and how that could continue to move the emerging markets higher.
Mike Tedeschi with this week's chart breakdown for you. We're going to take a look at two things. We're going to take a look at the Nasdaq, and we're also going to take a look at the Shanghai Composite Index. Let's start with the Nasdaq. While the rest of the U.S. indexes are still red for the year, the Nasdaq continues to make new all-time highs. And as long as the Nasdaq continues to push higher, we definitely have a risk-on environment. So we're going to continue to watch this, but this is an extremely bullish signal here we have continued to make over the last few months. Higher lows and higher highs, making new all-time highs. Trend is definitely higher. And the other chart that we want to take a look at today is another one where the trend is starting to change to higher, and that's the Shanghai Composite Index. It looked like in the beginning of the year with the pandemic coming out of China that there was going to be a ton of issues. Manufacturing slowed down. There was a lot of concern for what was going on with the Chinese economy. Well, here we are. They are now green for the year. We come in and take a look at this. We open the year right around that 3,100 level, and we are over it. And this is a nice break of a downtrend line as well. The next area of resistance really comes in at about that 3,250 to 3,300 level in for the Chinese stocks, but it's an area that is also showing strength and a new high for the year. So we definitely wanted to highlight that for you guys.
As I said in the beginning of the video, the coronavirus is on the verge of losing its status as an epidemic. And all you see in the headlines from day to day is the number of cases increasing around the United States. But what we actually focus on is the amount of deaths per day and the mortality rate. And lately, both of those things have been decreasing drastically. Now, the CDC defines an epidemic as 6% of the daily deaths being attributed to one disease. And on average, the US has about 7,000 people die every day from health-related issues. Currently, the death rate for the coronavirus is sitting right around 5.9% of deaths per week. Now that is right at the CDC's magic number of 6% to be named an epidemic. But the numbers that we've seen over the weekend are putting daily deaths in the low 200s. And if that continues throughout the rest of the week, the coronavirus will no longer be considered an epidemic. And that would be great news, not only for the states that are shutting back down, but for the country as a whole. Next, I wanted to go into a little more detail as to why we've seen such a big move from China overnight, as Mike was showing on his chart. China's manufacturing numbers were released and they crushed expectations and are actually showing a manufacturing sector that's expanding for the first time in over a year. Now, manufacturing is just one sector of an overall economy, but it is directly correlated to the health and performance of an economy. The PMI scale is measured from 0 to 100. And China came in at 51, and anything over 50 is showing signs of expansion. And to put that into perspective, the United States is sitting right around 49. This shows that our manufacturing sector isn't expanding just yet. But if you remember, China actually shut their economy down and reopened it a couple months before we did. So if we can continue on the pace that China reopened their economy and got their manufacturing sector back firing, we could be seeing manufacturing actually expand in the next couple months. So for the week ahead, we're going to be watching the number of deaths on a daily basis extremely close because we want to get out of this epidemic status and stay there. Thanks for watching, and if you find this content valuable, make sure you subscribe to our YouTube channel and follow us on Facebook.